So the live market is going on, and it's beautiful to observe the market and not do anything. So in this video, I wanted to point out how a breakout trades, how breakout actually happens, and what breakout does not definitely do. So so giving you a full overview on what is happening on daily time frame. Daily time frame, you can see the market is consolidating. It's already in a very hodgepodge situation. It's not a good place to trade at on a daily time frame. So exactly what was happening over here, what was exactly what you expected. Extremely wide ranges and choppy behavior. So basically, if you look from a bird's eye point of view, it made a W, and then it almost gave a breakout, but it did not sustain above this level. On 29th February, the GDP numbers came out, which were positive, and following that day, we had this huge rally this day. And this day in between, it's just a consolidation day, nothing important. So this is basically today. This is how the market has been trading for past few days. It forms an opening range and then takes out the high and low of the opening range. And it was also foreseeable that immediately after this breakout happens or this strong candle, either there is directly a gap up open, and that's how the range is broken out, or if the price has to sustain, then it sustains at least for 2-3 days. So in this case, this day, if you consider like half of it, and today, so I expected the market to be extremely sideways today, and whatever happens would have happened at the end of the day. So right now it's around 2 o'clock, only 1.5 hours, to be very honest. Have last 15 minutes nobody trades, so only 1 hour is left for the market to do whatever it can. So I'll tell you, this is the 1 minute time frame. You don't have to exactly look at it, but you can get an idea what it is exactly doing. So this is the range which market is trading in, and if you're expecting the market to break out, so I started expecting the market to rapidly move up after this candle 3 13 15, but I was also expecting there were further signs as well, like this candle, this bullish engulfing candle, and few other things like this level was being respected furiously. Again, bullish engulfing candle, and then following other bullish candles. So, and the higher high was higher low was getting made. So I wasn't expecting the price to just move out and make a move out of this range. I was expecting that at least the price will rapidly move up towards the day high. Whatever happens after that, we'll see. But this was a trade entry, trade idea, which I was planning on, and this the trade rewarded us very generously if we had been taking that. So this is at 13:49, 1 o'clock 49 minutes. This is very important if you'll see. And why it is important is, uh, if you keep an eye over here. Why is it important over here? Because the market has broken the range it was making since morning. It has came it has come down and then again sustained. It has broken out over here and then it has sustained. After a short correction, it has sustained, and then this candle, this doji candle, or more like a shooting star candle, was indicative of a reversal from here because the trend wasn't very strong. So what did this candle do? This candle took away, first showed a a negative candle, and then again it closed in positive. So many people would have entered over here, including me. And I'll tell you why this is wrong. This is wrong because even though market has shown this redness, there is absolutely nothing which material which the market has done. For the market to break out, it has to absorb the positions which have been made in the opposite direction. So in the current case, the opposite direction, uh, market needs to absorb the longs which have been made. So it has to trip the SLs of the long. So in this candle, the market hasn't done anything. This was its latest uh, lowest high, latest low, sorry, and the market didn't do anything. It didn't even go till here. And people would have taken entry after this huge Marubozu candle, which also happened to close above all the resistance levels on a 1 minute time frame. So you make an entry seeing the 1 minute time frame. There again, there is very good entry happening over here. Again, a double bottom pattern has formed. One can take an entry over it keeping very small SL, so I'll just do that. Most probably my SL will be triggered, but because the SL is so small, I'm more than happy to keep it. So yeah, around 20 points will be my SL. I'll And from here I think I will be aiming for a very nice high target, nothing less. So let this trade go on. I'll again come back to this later. What really happened was the trade where it really triggered was the entry was triggered over here. And you can see why. Because first it came down, it ate the SL of people who had made an entry over here. Good entry. It also ate the SL of people who would have been following this trend line, this small trend line on 1 minute time frame. If you can see over here, focus on this rectangle. This is also a small uh, trend line which the intraday people would have been following. Okay, so they waited, and this is also showing, this is showing a false breakout. I mean, you have to understand there are layers to it. It's showing a false breakout, but it's actually not a false breakout, because uh, if the market really had to go up, it had to absorb the longs whose SL could have been over here. And once this was made, the SL would have been shifted over here, and then this was taken out. All the people who had been entering on these levels, their SL would have been around this place or this place. And the way it went down on this thing, the options chart, it would have taken every SL. So then the entry was triggered over here only, but to be very safe, one could have had waited, and then again, uh, when the market showed its true nature, that no matter what happens, I will actually go down. So, and then this bullish engulfing candle was formed. This finally triggered our entry. There was so many uh, entry options available, because SL was long SL was taken out, market became lighter. People, FOMO people would have exited. Here the market also started making lower high on 1 minute time frame, and then this was made. So here short would have also entered. Shorts would have also entered. So this was the ideal place for the market to go up from. And this market, this is the place where I took the entry, is because as you can see, the double bottom formation, market has moved out. And even if you place a good Fibonacci level, I'm pretty sure that it is at a very nice level. Yeah, see, it's exactly at 0.5%. You can, I could have kept my SL below this. This would have given me more leverage actually, and greater targets. But I think I'll be sticking to my SL. most probably I will be profitable in this trade. But even if I'm not profitable, the SL is very small. I will be exiting around this place. So